Meanwhile, the Securities and Exchange Commission Chairman Gary Gensler facing scrutiny from Republican lawmakers who say he is pushing progressive policies that are out of touch and unconstitutional. A recent op-ed in the Wall Street Journal discusses his term as SEC chair, writing that Gensler is, quote, shrinking the U.S. capital markets and reducing opportunities for all investors. Congress and the courts need to rein him in. Joining me right now to talk more about that is former chairman of the Securities and Exchange Commission. He is now the CEO of Kellerama Partners. Harvey Pitt is here. Harvey, it's great to see you again. Thanks very much for being here.
Great to be with you, Maria.
And, of course, we've talked about the SEC looking and feeling more like the EPA in the last year than the Securities and Exchange Commission with these new rules. This is what the Republican lawmakers are upset about. How do you see it, Harvey?
I think there's a serious disconnect between some of the things that are now taking place at the commission and what the authority of the agency is. The agency has a very broad mandate, but it doesn't have a mandate, for example, to compel companies to report certain carbon green gas emissions levels, and yet the SEC is attempting to do that. The agency is prohibited in a statute that it itself recommended from regulating private investment funds, and yet the agency has proposed regulations to do that. My concern is that these activities will bring discredit to the agency because the courts are likely to undo much of what the SEC is proposing to do. And when that happens, the agency can lose its credibility.
Yeah, it's a good point because there is a real impact here. And I guess what I really want to understand better is how these new rules and this new sentiment out of the SEC is impacting corporate America. Because when I speak with CEOs and managers of businesses, they say their costs have gone up and the uncertainty has gone up. They don't know what new rule is coming down the pike and how much it's going to cost them to get in line.
In my experience, Maria, most businesses will follow whatever the rules are, but they need to know what the rules are. Right. What's happening now is that the rules are very murky. Rules that have been on the books have been removed. Rules that shouldn't be on the books are now being proposed. And while these cases go to court, businesses will pay a heavy price. So it's not just the price of regulation, it's the price of uncertainty that is hurting all of these businesses. And that is not a good way for American capital markets to function.
Yeah, and it's also odd that the rules are so broad-based, right? I mean, this most recent proposal from the Securities and Exchange Commission has a rule that says companies have to lay out and disclose whatever risks they have regarding climate change from their company, their partners, their customers, their clients. I mean, how are you going to get all of that information to ensure that you're reporting accurately on what the SEC is looking for?
There's an enormous cost associated with all of this, and companies are going to have a difficult time gathering the kinds of information that the SEC seems to require. The SEC's rule proposals go well beyond disclosing what's material. If climate information is financially material, it should and has to be disclosed. But what the SEC's rules are doing now is approaching this from a very different angle, and it's saying even information that isn't material has to be disclosed. That is really a very dangerous trajectory for the SEC to be taking, and one that causes great concern to people like me who believe in the agency and believe in its mandate.
Of course you do. And on that point, you also have wealth managers being questioned by the SEC in terms of how much of its investing is ESG. And, of course, that is environmental governance. And so what about that? You've got asset managers out there saying, we want to make sure we're following all the rules and we've got much of our money in ESG. That's alienating serious parts of the market, like fossil fuels. But that's the point.
Yeah, the difficulty here is that unless the rules are tailored to deal with financial materiality, and unless they're set forth in very clear format, all of these money managers, all of these companies are going to be at sea. They're going to be at a loss to know exactly what to do. And what's worse is once these rules are adopted, there will be a heavy enforcement component to follow up on the rules. And that is something that will add to their costs.
That's a great point. OK, I want to switch gears, Harvey, and ask you about the China story here, because Gary Gensler is also saying that at this point, it's not clear at the moment on whether American and Chinese authorities can reach a deal in avoiding a mass delisting of Chinese stocks from U.S. exchanges. Gensler said that the decision to grant access to U.S. audit inspections is up to Beijing. Harvey, I know you're doubtful that any deal will be finalized anytime soon, but in the meantime, all these companies are able to get U.S. money invested in their companies. And in doing so, investors are unwittingly or knowingly funding the expansion of Chinese communist China. And these companies are tied to the CCP. We know that the CCP has been very clear in terms of its goals. It wants to overtake the United States as the #1 superpower. It's aggressive all across the world. So isn't it true that if you're buying these companies, you're in effect funding the CCP's expansion, which might very well at some point turn around and turn hostilities on America?
That's an excellent point, and there's no question about it. Part of the difficulty that we have is that the negotiations that are going on are above Gary Gensler's pay grade. And by that, I mean, this has to be a government-to-government negotiation. It can't be an SEC regulatory body versus the Chinese regulatory bodies. What's required here is a hard line being taken that the Chinese government understands that these companies cannot be traded and shouldn't be traded even now unless there is an ability to audit them and get full access to the audit papers. And that's something I think that can only be done on a government-to-government level.
And by the way, what are they afraid of, Harvey? Why won't they just accept U.S. auditing rules if they want to be traded on U.S. exchanges? Are they afraid that the world is going to figure out that there is no profits, there is no revenue, and they're all subsidized by the CCP government?
That is a major concern, I think, that the Chinese government has. The Chinese government takes a very distorted notion of what are state secrets, and these companies are supposed to be independent entities. So I believe that unless there is a hard line taken, we are going to see a lot of difficulties with respect to U.S. investors in Chinese companies.
Yeah, well, it's a really important topic, very important conversation this morning, Harvey. We so appreciate your time. Thank you, sir.
Thank you.